Okay, there's the new swing high. Possible short here. New swing high, 1 bar final flag. This momentum is up enough that I probably would prefer to buy a high 2 than I would to short this. Market came down to the moving average, and I think that looks like a 5-tick failure. Okay, and here's that high 2 that I was looking for. So it's a bull flag, high 1, pull back to the moving average, bull bar, high 2. Again, I'm only in scalping mode on a trading range day, so I just try to collect lots of little scalps. Another expanding triangle, up, down, up, down, up. The first entry didn't work. Maybe there will be a second entry. Not a good-looking signal bar, but the market's been reversing every new high. It reversed above this high, it reversed above this one, it might reverse above this one. Okay. The advantage of this little bar is if it triggers, you're only risking 4 ticks. So if you short here, your stop is up here. I'm not looking to buy up here. The day's just not strong enough. This leg up is really not any stronger than the leg down. It's testing yesterday's high. I think there's too much risk of sellers up here, so I wouldn't be buying. Okay, I think this is a nice looking setup for a short. As I said at the time, I was hoping for we got an expanding triangle, a second entry. Here's the first, here's the second. Decent momentum down here, so I was hoping for a lower high and a second leg down. And I always like to see a bad-looking buy signal setting up, because then I'm pretty confident that the buy signal is going to fail. And if it fails, there will be trapped longs, and that creates a good short. And I think this went outside down, and it did. Okay. Expanding triangle on the downside, down, down, down. I'm not shorting down here for the same reason I'm not buying up here or up here. It's a trading range. If it goes down 5 or 10 bars, I only look to buy. I don't look to sell. I think this is probably an okay long. It's a little risky after an outside down bar. Okay, possible 1 bar final flag. You could buy above this bear bar or above the bull bars, or you could wait. It's the wedge bull flag, 1 push down here. Second push down here, third push down here. There's room up to the swing high, so there's room for a double top bear flag to form. So there's room to buy up here. Possible double top bear flag, but if the bears were strong, they would not have allowed the market to go above this bar. They also would not have allowed 2 strong bull bars like this. So this is not the way a strong bear looks. So therefore, it's not a strong bear. It's still approximately a double top bear flag, and the market has a lower low here. Here's a low, here's a lower low. It might form a lower high, so it might be an okay scalp up down. Okay, I don't like large overlapping bars. There's a wedge bull flag, a breakout, and a pullback. That's not a great looking signal bar, but the market tried to work up. Went sideways in here. Okay, I'm not buying up here. I don't care if it's a failed top. I don't care if it's a failed head and shoulder stop. Shoulder, head, shoulder. What I see is 4 or 5 bars that are basically overlapping with lots of tails, and there'll be a magnetic pull in the middle of this, so I don't want to buy the breakout. I also don't want to short this. I'm just going to wait. Okay. The short turned into a 5-tick failure, a breakout pullback, breakout above the right shoulder, pullback. Might be okay long into the close, which I think it turned out to be. Anyway, interesting day. I like days like this. I don't make as many points as I do on days that have big swings, but to me, it's a fairly easy read, and there were a lot of decent trades. And you don't have to catch all of them. If you just catch a handful of them, you have a nice day. So going into tomorrow, right now we're double topping. Remember, a lot of times a market will test the top of a wedge to the tick and then sell off. I think what's going on here is people are just waiting to hear. I don't even know what is reporting today, but people are just waiting to hear what the earnings reports look like. 60-minute chart, spike, channel. This gap in here between this breakout and that breakout, it's possible that the middle of this gap will lead to a measured move up. I don't know if this is the exact middle of the gap. It looks like it's kind of around the middle of the gap. So it's possible that the market runs up here before it starts to correct. That'll probably be in the area of the bear trend line. On past views, as I've said, we had a very strong move, and then a sideways day with just a little bit of strength at the end, and then another sideways day with even less strength at the end. And then today was the first day with enough strength to break the bull trend line. And now the market is deciding on whether it should form a higher high in the sell-off or a double top in the sell-off. It tried to form a lower high in here, but it failed to sell off. So it's probably going to have some kind of measured move up based upon this failed lower high. So maybe, but as you know, I'm open to anything. But I do think we're getting increasingly two-sided, and we've been away from the 60-minute moving average for 4 days now. So that increases the chances that we'll come back to it in the next day or two.